following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at some of these markets today. We are entering a really interesting time period here, in my opinion. I believe we're getting ready for one heck of a rally. I know that seems like it's hard to believe, but we'll go over some of the things that we're looking at. And believe me, there is nobody more bearish on this planet than I am, with maybe the exception of one or two people. But longer term, gee, folks, this looks really, really bad. The first chart that I brought up here shows the 52-week high sectors of the market, and they're down. As you see, energy's down, 50% from their highs. The rest of them average around 24%. Now, we made the high on the actual high of the market was made May 19th. That's when we had the new moon and Mercury going retrograde, when we had friend Norm Winsky from Astro Trends on the line pointing that out to us. So that's pretty much happened so far. Now, if we take a look at the overall global markets, the ones we're talking about, the globe, the one that Pythagoras holds in his hand. This is a summary of some of these stock markets around the world, and you'll notice that they're all in the red. And in fact, there is not one that is higher, which is very, very interesting. Now, there's a couple other factors. I'm going to throw a few things at, and then just, to let you see what I'm seeing. I throw some darts or rocks, whatever you want to at it, but let's just look at it for what it is. It has nothing to do with the fundamentals, folks. I don't know diddly squat about that stuff, and I tried to figure it out. They hand my head in the basket, so I sort of stay away from it. But you can see, we've had some pretty big corrections here in the markets on a global basis. The other thing that's happened this year is that this started out as the very worst day ever on the first day of trading of any year in the history of the New York Stock Exchange. It broke the record that had been held in January of 1932. Those of you that were not trading around that time, you'll notice that the low of the market in the Dow Jones Industrial Average happened in 1932. That was on July 5th when the Dow Jones bottomed at 41. They had a high at 386 back on September the 3rd of 1929, so it came down for 3 years, and then it started a bull market that lasted 80 years, and it's been one heck of a move, and it's had ups and downs, of course. But to realize, if you stop and think about it, ever since they started trading stocks, there have been almost exactly the number of up days as there have been down days. That's hard to believe, isn't it, folks? But that's the actual figure. I think it's like 50.1 to 49.8 or something like that. It is really, really close. So, these markets go up and down. Now, what we're watching now is a market that's making a pretty good correction in here. I mean, there's no question about that. We're down into areas where we should be making some pretty good support that John Logan is focused on, also Basil is focused on. But these are the things that I'm sort of, keeping an eye on. Now, there's one other factor that I wanted to show you, and that is in historical purposes. And this is, you got to look at history because, like Napoleon said, the man who doesn't read history is bound to repeat it. But you can see what happens is the odds of a losing year increase quite a bit when the stock market's on the first day of the year, and this was the worst day ever. So that's a big omen. We ought to be able to, keep an eye on that. Just to remember that these things, because they're gonna be feeding us all kinds of tapioca here pretty soon. Because the worst thing. Well, let's stop a little bit and think here. Not the worst thing, but what will usually happen in a bear market, okay? And I think we're in a bear market. If you look at these, we have lower bottoms, lower highs. I mean, we got, everything tells you that you're going down. I mean, there's just no other way to look at this. You know what I mean? And so what you want to do is to watch the quality of the rally that we're going to get. See, that's the key that we want to be watching, is to see the quality of the rally. We've come down, and I'm going to be covering this in the newsletter this week, and really give it some, give you a feeling of where I really think we are and where we are with the Bradley model and a few other things. But it's really set up for a really bad year. Now, I remember last year, I believe we started off poorly, but nothing like we did this year. And but we'll see what's going on. Remember also that in 2015, we broke a couple of things. The market almost never goes down in the year 5 in a bull decade, and it did. And also in pre-election years, it doesn't go down, and it did this year too. So we've got a lot of things that are just adding up, and adding up. Now, what the financial press is going to tell us when this rally starts, and I really think that we have one going that's getting ready to move anyway, is just tell us that things are going to be okay. That was the bottom. Everything looks great, and it probably will look pretty good, but we'll wait and see. Now, if you remember, at the beginning of the week, I posted a chart of the Dow Jones Transportations. If I've lost this chart, I'm going to be one mad puppy. Uh-oh. I guess I'm going to be mad. Oh dear. Anyway, I'll post it maybe at the break if I can find it. Anyway, the Dow Jones Transportation has actually made the big ABCD on the long-term weekly charts. It's hard to believe. It's about 100 points of that, with it being down 200 points yesterday. We're pretty close to what we're looking at that point. Now, the other reason why I think there's a potential for a rally coming in, not just the fact that we've got some of these dates coming up. We have a new moon coming up, and we have several planets in retrograde motion that are also indicative of some type of a trend change. But if we look at the look at the VIX index, the volatility index, folks. Look at the September 24th high at 52. And some of these things have come down and tested that. And we're only at 25. And they were halfway. There's no fear in the market. None. Zippo, Bupka. This market is not, and we got China where things are going, to hell in the handbasket. And that's that's just another thing that they use for financial reporting. That's all. It would take 76648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks. We've got a caller from California. Paul, are you there?
Yes, sir. Good morning, Larry.
Good morning. What can I help you with?
Well, I was curious about when this downturn really gets going, where you see it actually going to. Do you see us testing those S&P lows of the 666 level of 2009, or do you see this as not such a major event? And also, I just wanted to say thank you so much for the show. I'm a young investor, so to get a perspective from someone who's been doing this for so long and has so much experience is invaluable to me, so I really appreciate what you do.
Well, thank you. It's words like that to keep me wanting to keep doing it, believe me, because I appreciate it when people, because I put a lot of time in on this. But getting back to your question, the low that we had on March the 5th of 2009 was a very, very significant low because it hit so many perfect numbers, as you know, going back from 1974 through 1982, 1987. They were all perfect numbers as far as the Fibonacci sequence and also the astrology part of it too all fit in. But what I'm looking at, Paul, is something that is, I don't even like to talk about it because people, I don't want to scare people, but since you asked me the question, I think you deserve an honest answer. I do believe we're going to go below that, but it's going to take several years to do it. We will know more about what's really happening when we take out the lows. It's the 24th. That's when we had the first big breakdown. Then we had the rally back to the 61% retracement. And now what we're doing is we're going to have I think we're going to have a little bit of a 3 to 5 or maybe even a 2-week rally here in the next week or two, maybe into maybe into early February. And then after that, that'll tell us more, because when we take out that August 24th low, that is going to be that's going to be really big. And we take out the October low of 2014. Oh my God, that's the one. If there's going to be a crash, that's when if we take out that low of October 2014, then whatever, it's a crash, whatever you want to call it. But you folks here, listening here, most of you were not around in '87 when we had the crash. I hope you never see one, because it's not a fun thing. And I was short. I mean, it was even fun for me, and I wasn't short because we didn't know if the brokerage firms were going to be okay, but we're going lower. This is a multi-year high that we made, going back a very, very long time, and I think we're going to go a lot lower. And I believe there's going to be very few segments of the economy that are going to be, we'll see what's happening. So anyway, that's what I'm looking at.
Awesome. Thank you so much for your perspective, Larry, and your hard work. I really appreciate it because, like I said, being a young investor, having someone with so much experience to kind of help guide me along the way is an awesome thing.
How old are you, Paul?
I'm 36.
My cat's 36. Okay, listen, you have a wonderful holiday, my friend.
Hey, you too, sir. Thank you very much.
Okay, thank you.
Bye-bye.
Okay, anyway, well, now we'll get back to the S&P here. I posted a chart in here earlier in the week of what we were looking at. I was joking about the cat being 36. There's not many cats that are 36 years old. That would make him, 212 or something? And I've never had a pet in my life, not even a goldfish. Anyway, we looked at this early in the week after we had the 38% retracement on Monday. Absolutely perfectly to the tick up there at 2015. Then we broken down. We were looking for a price level of around 925. We got down to 920, 930 and change. Now, we could still get down there. We might still make this by Monday because Monday is the new moon and it should be pulling in to that level. So we'll see if that's going to be the case. It's going to be hard for the market to have a really big reversal today because it's a Friday and a down week. And I would be a little skeptical here to think that maybe there's one more bottom in here. I'm not sure yet, but I do believe we're going to get a rally here because we've been in a down move for 2 weeks now. After the more than that, but the last rally high was way back December the 29th. We're 2 weeks into this down move here, but we're 3 months in a down move in the market, so we could get any type of a rally. Now, one of the worst things that can happen is you're waiting for a rally that doesn't occur, and with a lot of things going on in the world, like we see in China and other things like that, it's not always going to happen. Regarding China, 20 years ago, 1996, the Chicago Mercantile Exchange sent me to China. Every year, I would hit 10 different cities, and I would give lectures at the universities, at the graduate schools, on what commodity markets were all about and what equity markets were all about and what speculation was all about. And we would talk about 3 hours. It would be a group anywhere from the smallest group I ever had was about 400, and some of the auditoriums were 1,200. And the people spoke both, the English was the second language there. So of the cities that I hit, we always tried to go in and give them an idea of what commodity markets were going, because China had already decided to go in. In 96, when I made this trip there, I was watching Beijing television, and on the left-hand corner was an up-to-date picture of what was happening to gold and crude oil on the left-hand side, and on the right-hand side was the Dow Jones Industrial Average. Those were inserts on what was going on. And so we would give lectures, and it was just myself. They would have a driver for me. I'd go from one to another. But I enjoyed it very much. Me to see the country very, very much, which I really enjoyed doing, and it was very fun. I made a lot of friends too. So, however, let's get back to the real story here. The Chinese folks do not have the experience or the history in capital markets like we have here, folks. Those folks had never heard of the book Reminiscences of a Stock Operator. I mean, they don't have any historical books. I donated a bunch of books, to the university, but the number of people that reached that, very, very small. So anyway, that's what we're watching over there, because they don't have any experience, and the people running it have even less experience, because they went to the Chicago Mercantile Exchange for experience, and they did give them a lot of good experience. But the only way you get it is one school, boys and girls, and that's the school of hard knocks. 3 years ago, the Shanghai market opened their new stock exchange building in a 93-story building in Shanghai. I was fortunate enough to be involved in the opening of that, and I gave a lecture. And I told them that you're going to see things that are very unusual, and unless you study the history of the market and the numbers of the market, you're going to be really surprised at what's going on. Well, that went over like Kool-Aid in a what was that guy's name? Jim somebody or other. I forget what the Kool-Aid guy's name was. But they really they don't study the markets unless that's pretty much what it. So take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to switch our news over here to the gold market here, because we've had some gold popped up here to the 11th 12 area last night before we had a $20 break, which gave they took $10 back right away. So it's very, very active in the gold market. The question is we need to get that thing above the 11.15 area. to see if it's going to have a pretty good run here. Now, earlier in the week, one of the things that we were looking for, in fact, I did this in the newsletter last week, was to look at gold, because we had those two areas, the one in December where the market, where we were in December, it looks very similar to what we had in July. And as you notice, we had a $70 rally in July. So this could be the start of a really, really big move in the gold and silver market. And I still believe that anybody that does anything with any kind of trading at all should have some silver rounds, the 1 ounce silver rounds. You should have some of those, folks, because we live in interesting times, as they say in the Chinese curse, and you certainly don't want to you don't need that very much at all. One other thing that I wanted to mention that we've been following, and that is the if you'll notice here, just give me this, pull this up here, we'll see how accurate this thing has been, because it's been really tremendously right. That's that neural network program from Larry Edelson. And as you can see, we bottomed down there right before Christmas. We had the rally up into around Thanksgiving, then we wrapped right before Christmas, and you can see how we came down into the first of the year. And look what happened on the 4th. That was trading day, and we've rallied almost $70 an ounce. We're only $67 an ounce in a matter of just a few days. So that takes us up into the 25th of, that's another 3 weeks potentially up, but this is a potential for a really big move. And remember, we got this thing in the middle of November, and it's been following in trial. So you have to give credit. This has been a very good cast, and you've got to respect what they really do. So we want to watch that. So now the other one that's interesting, since we're on the goldens, is silver finally took out the highs of the last few days yesterday, and we did get up to the 440 level. We did the highs from Christmas Eve. Gold, shattered those. Gold went well over $35 an ounce higher than those highs, but silver still lagging, quite badly. But that could pick up, easily. I basically, when that gold got up to the 1104 area, I raised my stop really, really close. As soon as it dipped below 11, I decided to stand aside to see what's going to happen with it over a longer term. So we want to watch that as we proceed through here. But it's got a real chance here, to really take a look at this, and then we'll find out what's going to happen, a little bit later. So we're having some really good swings in the stock market for sure. We've had these ups and downs, which we like to see if you're doing swing trading, of course, but I'm not 100% sure that this is the bottom. I still think we got a chance to be bottoming more on Monday, we might be coming from a higher level. That's what happened in gold. Gold $3 higher than the actual bottom, because that's when the cycle really takes off. That's the whole premise of it, is when the cycle takes off, it's when it finally ends. And of course, no one knows that except God, and she doesn't trade anymore. So we'll watch it, see what's going on. But there should be some pretty stiff resistance up around the 1978 level in the S&P today. Ideally, what you'd like to see is a quiet day with the market closing near the lows. And then we make a lower low come Sunday night or Monday around the 1922 level. And believe me, with the news out there with potential Chinese nuclear, or not Chinese, but Korean nuclear stuff, and Saudi Arabia having a lot of trouble, and just there's so many things going on in the world, you can just pick one. But the market is acting. The United States markets are acting incredibly well, folks. I mean, you stop and think where the VIX index is. That's it. Someone asked me, yes, I am. I'm out of gold. The futures. I own physical gold, of course, but I'm not in the futures right now. I want to respect that number up there at 1104, And believe me, you don't get a $67 move in a week very often. And so I know it's very overbought right here. And so I'm just looking to see a little bit of a pullback. We backed off $20 this morning really quickly. And of course, the harmonic number in gold is, 17 and 35. We got down to the 960, 1060. Wow, let's try it again, Larry. 1094 level, which was down off of that number. I thought of buying it there, but I wanted to wait to see what happens. We got a lot of stuff happening here astrologically on Monday, and I think that's going to be a real key, to look at. That's what I'm following anyway. I hope that's the right thing to do, but whether we see that or not, we'll have to wait and see. The one thing that happened really interesting this morning from a technical perspective was in the bond market, because the bond market came down and made a beautiful pattern, absolutely incredible, 61% retracement of the previous lows, and it was just really amazing what it did. And I've put it into the format here, and if I can find it, I want to show it to you, because it's really there it is. There we go. We did it, I think. Yay! Oh nope, that's not the one I wanted. That's the other one. Okay. Well, I should put that one up because someone's asked a question about the Australian dollar. Anyway, this is something we were looking at before, and we did get down in the Australian dollar from what we were watching here. We hit this number yesterday in the Australian dollar, and that was, we have a bottom around the 11th, but we did get down. We broke that 70 level yesterday. We got down to the 69.80 level, so that completes this pattern in the Australian dollar. So if we get another rally in the Australian dollar, we want to be looking at that to be potential, short position, because that still it wants to moves lower. Norm Winsky's date is the 11th. That's what I believe that's his big date. Because that's his new moon. There's a couple of retrogrades, but 11th and 13th, that's 2 days. So you could be either one of those 2 days. So it's going to be difficult to use some patterns in order to pick out the ones that give you the basically pullback of what you're basically a place to determine what your risk is going to be on this. So that's what I would be watching for this. 877-927-6648.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien,
Tommy O'Brien and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, I've posted into Tiger TV the bond chart. I wanted to show you the cycles that are there. This is shorter term. It's only a 3-day cycle, the 15-minute chart, but it shows how it hits these support and resistance levels. I mean, we went down to an exact number, 1.27618 level in the Treasury bonds. It immediately rallied, one full point, $1,000 in a matter of minutes. About 3 minutes, as a matter of fact. So it tells us that's a pretty significant spot in the bond market. That's another reason why I don't believe the market's going to melt down from this level. I think we could get a pretty good chance of making another lower low, of course, because of the date that we have coming in with the new moon and the retrograde stuff that happens on the 11th. One of the questions that's been asked was, when I go back and look at these things, how do I find out what really happens? The way we did this in research is that we started out by going over the last 135 years. We would look at the markets and find out what happened on August let's just go back to on July 5th, 1932. What was going on astrologically? What was going on in the major turns in the market? 1974. The October and December bottoms, that double bottom, that was monster conjunctions of a lot of different planets. I mean, my gosh, it was unbelievable 3 months apart to see all of that. I mean, I didn't know about this till later, but I went back and studied it. Then we looked at 1982, what happened during that time frame. Of course, 1987. And then again, what happened in March of 2009. And again, what happened in March of 2000 and March of 2000. We have some of these things that when they line up, they have similarities they're just striking. I mean, when you look at the transit charts, you'll say, my gosh, these are the same patterns that we've seen before, and that's what we're trying to do. Now, we're not always right, but it's the best thing I've seen out there, and I know that that's what rules the markets because it's ruled on numbers. And like Einstein said, before God was numbers, and God does indeed geometricize. So that's all we're looking at these numbers and patterns. And sometimes they work, sometimes they learn, sometimes they don't. And eventually, yes, that's correct. Mr. G just pointed out 1837. We didn't have good data there on stocks, but the astrology stuff was there. That's what we're dealing with, folks, in my opinion, is what's happened in 1837. This was the abolishment of the first U.S. bank by Andrew Jackson, as I recall. And the main thing is that we have to look at, the possibility that there's a lot of shenanigans going on. But he was really, against the Federal Reserve, as was a couple other people, including John F. Kennedy. Okay, let's go into more of the astrology thing. So what we did is we looked at all of those key dates and we found out, yeah, there's something really big happening here. And then, of course, Twentyman being the master of, Fibonacci and other stuff that he does and sacred geometry, he was able to line up some of these things. But it never really came together really, really tightly for me until I met Bryce Gilmore in 1988 when he showed me all the numbers of the sacred geometry. In other words, the numbers of sacred geometry, folks, are the numbers 1, 2, 3, 4, and 5, and the square roots and the reciprocals of those numbers. That'll cover everything you want to see in the market. And what I do is I keep it just really simple to using, the 618, 786, 127, and that kind of stuff. And that's pretty much what I try to do. And you try to be right about 6 out of 10 times, sometimes more, sometimes less, but that's what you're really shooting for. So we'll see if that's it. The one thing I can tell you, folks, this is it. That top we made at 2134 in the S&P 500. This old cowboy never going to see that again. I can promise you that. That's a slam dunk. That was so big that this is the big one. This is the one that's going to really, really, really hurt some people really bad. I mean, this is going to be Lehman Brothers, Bear Stearns type stuff, folks. So you just want to be able to see what's going on with that. This is and not only that, but there are not many people. There's a few people out there that think that could happen, and I'm not trying to be. And first of all, it's not going to go straight down. We're going to have a great economy. People lived through the Depression, but if you look at the socioeconomics behind this, look what's happening. I'm getting back into the Neolithic time period here, but we had wooden toys when I was a kid. Now my little grandson, he can take his mom's Apple computer, her Apple phone, and he knows how to operate the camera, the flashlight, the videos, the YouTube. I mean, he's 4 years old, and the 2-year-old, he's not very far behind him. And I'm way back, beyond that level. We're not in a big bear market yet. People don't think that we are. I think we are, but I think it's getting ready. It's getting ready to happen. I will say this: when we go below the August lows that we made in the S&P and in the Dow Jones and in the New York Stock Exchange Index, then you will see you're in a big bear market. There won't be any question about it. I think other people will start to think about it, and what they'll do is, given the history of what Bernard Baruch said in his book, My Own Story, and he was one of the greatest speculators of all time. He was a personal friend to President Roosevelt and Hoover and one or two others, so we'll see. They can fix Studebakers in Cuba. That's one of their favorite cars down there. My uncle actually was an engineer for Studebaker up in Fort Wayne, Indiana. So I remember that a long time ago. Okay. Let's get back to the thing. First of all, we'll all survive through all this, and all I'm saying is I think there's a bear market coming. We'll wait and see. I just know that this is the big one. This is the one that's it's really really big. Do you remember for Fort Wayne, Indiana? You remember a guy named Mike McCoy? I think he was the first 7-footer ever to come out of Indiana, as I recall. I played against him in 1957 once. And boy, when you're only 5'10" and you're looking at someone that's 7 foot, boy, that's a really big, really big deal. Anyway, okay, we'll see what happens. We'll see what happens with these markets, but we'll wait and see what's going on, and we'll take a look at it. What's going on? Wow, 6'4", that's pretty tall anyway. We'll see. Okay. Oh, Fred Sanford, God, I really loved him. Oh, God, Red Fox to me was one of the greatest, one of the best ever. Yes, I did play basketball. I had the record of the number of consecutive free throws in Indiana for many, many years. It was broken by some bum out of French Lick, Indiana, many years ago. And so anyway, who knows what that is. Okay, we'll go on here. We've had a little bit of I hope everybody can still hear me. It looks like I'm having an internet problem, but we'll just keep flapping our wings here until the next break comes up, and we'll check the markets of what's going on and see what's happening here. Okay. All right. That's we got the Dow up. Well, it's not up that much. Wow.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got Mr. Z from Philly on the line. Mr. Z, are you there?
Hey, Larry. Thanks for
Happy
all you
holidays
do.
to you, buddy.
And I know come Monday morning your voice is going to be better. So that's coming. You can look forward to that.
Yeah, I certainly will. What can I do for you, my friend?
Last year, last 2 weeks of December, you graciously shared the idea with us that the grains could be setting up for buys, and you were waiting for the new year. Interestingly enough, Monday and then Wednesday, corn, wheat, and beans sold off to make new lows for the move of the past 2 months and have abruptly reversed. Not reversed higher, mind you, but at least a clue of something. I posted in the Tiger's Den the 3 grain charts for the March contracts, beans, corn, and wheat, so Denners can take a look for themselves. The fundamental news is just overwhelmingly bearish, and the commitment of traders data put out by the CFTC shows that speculators are holding near-record short positions, meaning there's ample fuel there for a meaningful short covering rally. So I share those facts, and I wanted to ask, what do you think? What do you see? Are you long?
No, I'm focused on the currencies, the metals, and the financials right now. I'm going to wait till the first of the, well, it's past the first of the year, but as soon as we get past the 25th of January, I'll start to look at it. I'm watching the charts too. I saw the bottom come in a little bit in the corn and the wheat and the beans, but I still think we've got a little bit more to go on the downside in beans. I could be wrong, but I've just got too much energy hooked up with the euro, Canadian dollar, Japanese yen, and also with the gold, and then of course the stock index futures. They take up about all of my time, my friend. So I'll be watching it though, and I really appreciate your feedback coming in here.
Thanks for the input, Larry.
You bet, buddy. Happy New Year to you, Mr. Z. Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.